very warm welcome to the very first podcast hosted by Fifth Nine. My name's Philip Harrison and I'll be interviewing today Yakin Prabdial, who's the Managing Director of Fifth Nine.
Hi, thanks Philip. Great to be here.
The topic of today's podcast is all about money, money, money. Must be funny in a rich man's world. The role of ICOs in the future of business financing. So let's start with some examples of companies doing ICOs, and let's give a bit of context for this podcast. Some examples. Overstock has done a token sale targeting to raise about $500 million. Kodak has released a cryptocurrency called the Kodak coin for photographers to protect their rights. Telegram, the famous ones, an ICO raising $850 million in their second round of their ICO. And even Starbucks executive chairman Howard Schultz was talking about cryptocurrency this year, although he didn't actually commit to be doing an ICO. Let's start with the first question on what ICOs are. Okay, so ICOs, for the muggles out there, is initial coin offering. But Yakin, can you explain in simple language what an ICO is and what can it be used for?
Sure. So an ICO is pretty much a startup's way of raising capital through non-traditional means. And what this means is they produce a promissory note of a token of a undetermined value that effectively allows access to the utility or service that they are promising to deliver or build. And what's very interesting in the early days of ICOs is you found that they produced these Kickstarter type models based on white papers and based on mathematical determinations that effectively wowed the public and gave us some insight that these guys would effectively build the technology, move the blockchain movement forward, enhance the world with new technologies which are adding value to the distributed ledger world, and effectively produce something of meaningful value. What we find in today's ICOs, however, is they are looking far more stringent, akin to IPOs or initial public offerings. So you find that ICOs are becoming more and more stringent, it's becoming more and more self-regulated, and that the public are becoming more and more aware of what they're getting into when they buy these unregulated tokens.
Okay, so what they buy into for the tokens, they don't actually own part of the company then, they're just a way to give a company money in the hope they're going to build something.
Exactly. So the idea behind this is, imagine you were selling spaces in a parking mall without the parking mall being built. And the token is a representation of having access to that parking space. It doesn't represent a share ownership of that space. It's almost a timeshare that's equivocal to a utility or a bus token. In the same way, they raise a fair amount of cash, being able to generate these tokens. The beauty of the ICO model, outside any other model, is that by the virtue of the blockchain and by the virtue of them capping the size of the tokens or coins that they will have circulating, this prevents them from fulfilling quantitative easing, which was the huge fiduciary challenge that we saw in the US dollar.
So are there different types of coins? So are there some exactly you modeled there, or are there other coins that you do actually in the company, or is that an entirely different thing outside the whole ICO concept?
I think coming back to where business financing is going to go, I see that the ICO model will take on a stronger flavor of the securities model, which is actually representation of an asset base, as well as the traditional model that ICOs follow today, which is trying to produce utility tokens, which don't have any asset value and have access to the very services below it. So the asset class of the securities will effectively start to represent some holdings in the company, and that is where the Securities and Exchange Commission in most parts of the world will have a clampdown.
I get that, so you've got the parking space concept, makes absolute sense, but why would the price go up and down? So if there's a certain number of tokens out there and I'm purchasing a token, why would it then fluctuate?
Aside from the schemes of the liquidators of coins who pump up the prices and then shift it across just for financial wealth, the tendency for these coins to move up and down has a lot to do with several things. One, a lot of them are based on your initial blockchain 1.0 coins, which are the Bitcoins and Ethereums, and they're highly gravitated by the prices that those generally move by. And as can be expected, those don't have a technology or an underpinning service behind it. They are effectively a pure cryptocurrency. So by having a strong steer with the existing cryptocurrencies, we can expect that the volatility of the initial big movers in crypto, like Bitcoin, Ethereum, Litecoin, and others, will impact the new ICO coins. The second reason why the coins suffer volatility is that the people who run the ICO tend to be vetted and tend to hit some milestones. And what we've seen in recent past is that these milestones seem to be out in the future, they seem to be delivered late, and they do produce a sense of uneasiness in some places in the market. Others have done really well, where they've held their value strong and the coin has grown from strength to strength. And I think that the reality is that, volatility aside, the long-term game on any ICO needs to be weighed against the team, the value, the concept, and the ability to add implicit intelligence to the entire blockchain community.
So that's the blockchain. Let's talk about how you actually do an ICO. So there could be people listening to this going, that sounds brilliant. It's a way for me to raise some funds, got some great idea. How to actually do it? Just a bit of a background on it for our listeners. So 2017, there was a huge boom in companies issuing their own digital currency. It was around $4 billion was raised through ICOs last year. And at the minute, there's about 1,400 alternative coins out there in the market, according to coinmarketcap.com. Let's talk about the how people actually get involved in doing ICOs. So is it a lengthy process? Is it quite technical? Is it really easy to do? And so with that, is it scalable, or is it only actually open to a small specific companies who do blockchain technology because they've even got the know-how how to do it?
I would say that the ICO process today isn't documented. It is largely unregulated. And as a result, getting into the ICO space can be quite daunting and challenging. Not to say that it can't be done. It's best to be viewed as a Kickstarter type model. And to be fair, in London, we have found some ICO maker companies, interestingly in our research, that tend to produce and claim to produce startup ICOs based on their public relations, based on their marketeer material, based on their access to the crypto experts who will effectively put down hard-earned Ethereum on top of their newly formed coins. So I would say that producing an ICO, it is a technical affair. However, there is a large amount of organizational and media clout that goes along with the success of an ICO. A good example is if you've got a brand like Kodak, you can pretty much launch based on brand reputation. If you've got other brands which don't have any composite in the market, you've got to show the public, you've got to show the whales in the Ethereum and the Bitcoin communities that these coins and the team behind it, the stature and the service behind it, the technical capabilities actually will make a difference and will be built. It's the delivery, implementation confidence that I think will be key, which comes full circle around to the subject, which is of business financing. Because when you look at ICOs as a mode, an alternative mode outside venture capitalists and private equity to raise capital, currently it's only open to generally startup companies. And you find that, I think Kodak's made the headlines. Long Island iced tea was an interesting example. There are very few established brands that tend to launch ICOs today.
Could anyone do this? Let's say there's someone listening to this who wants to open a range of bed and breakfasts and they need to raise some funds for it. Could they do it? Is it open to anyone?
I would say that today the ICO model is baked in implicit value in DLT or blockchain. So fundamentally, these tokens or these coins that are issued on the various exchanges needs to come from a wallet of sorts. It needs to have blockchain at its heart. It needs to illustrate that there is a distributed form of technology that the service implicitly needs. And in the bed and breakfast example, it would be quite challenging to find a problem to the solution.
Let's go back to the Kodak moment for the financing. They're a big company. Obviously, they were much larger than they are now. But one would have thought they would have had the option to sell shares. So why would a company choose financing through ICO rather than selling shares to the company?
That's an interesting point. So I think that Kodak's ICO is very interesting because as a big brand who already is a publicly listed company, liquidating their existing shares, which is dwindling, means that Kodak would effectively reduce their market cap and would cause a lot of movement in the market in terms of what is Kodak actually doing. An ICO for Kodak is very interesting because it doesn't actually change their share ownership. It doesn't actually change any of the asset classes that they're producing. And interesting, Kodak is claiming that this is a utility coin which gives access to photographers to a digital rights access management platform. So it is effectively a token to a service that is hosted in Kodak's cloud without any of the public purchasing shares from Kodak.
So if you're going to do an ICO base, you need to base it on something on the blockchain, distributed ledger technology, so be involved in a company like that to come up with that benefit, and then the ICO can help fund that kind of technology.
And I think the big thing is that with ICOs is we've seen that if the technology is thinly veiled around a blockchain, in other words, it doesn't need a DLT, or the DLT application is superfluous to the core service, the maturity in the funding circles of either the whales or the sharks or the minnows in the Ethereum and the Bitcoin worlds, even the traditional investors, have now enough business acumen over a series of cycles over the last couple of years to see through that veil. And they very quickly root out these so-called 9,000 coins, and only a good 5% of them actually start to survive and are built. So as a result, you see that the people who vet the ICOs, which is effectively self-vetting, do have much more business acumen than they did in the early days. And they ask for far more rigorous tests of value and of applicability before investing.
Let's talk about regulation and whether this is actually a model that can be sustained. So there's a bit of a mixture around the world on ICOs. So you've got China's banned ICOs outright. However, yesterday or a few days ago, the UK Financial Conduct Authority issued guidance for banks on how to work with clients holding cryptocurrencies, which is a positive mood, obviously. Last week, the Lithuanian government released ICO guidelines. The Moscow Exchange looking to develop a platform to conduct ICOs. And yesterday, Thailand reported that they were expecting to approve around about 5 out of 50 ICOs, which is, again, very positive. So a bit of a mixture there, but obviously China being very negative on it. So where do you see the future in regards to ICOs being allowed or being regulated? Because I guess for this to become a stable source of financing, it does need some structure about it.
Yeah, I mean, there's loads of fraudsters, tricksters, and scams in the ICO world. The reality is that with big companies declaring interests in this alternative mode of funding, we hope that this model will become mainstream. We hope that it will create an alternative business model to start to bootstrap disruptive technologies which can't go for traditional funding, either internally into the boards or externally into share splits. So the ICO will form some form of barrier to entry. It'll remove a barrier to entry that currently exists in the traditional business investment forms. In saying that, I see that these regulators will play a strong role in being able to enforce and govern certain rules. It's very interesting that Thailand has started to open up the Securities and Exchange Commission on their side to allow ICOs to grow and bloom. We see that, of course, in Singapore and in other ICO-friendly countries. However, the regulators still have a very strong place to play in order to give ICOs the soapbox it needs to become mainstream business financing as of yet.
So coming back to the, there's a lot of talk about it being a bubble, the whole .com kind of bubble synergy. What's your thoughts? Do you think it's a bubble? Do you think it's a stable? Do you think it's going to fundamentally change?
With the recent crypto news on the weighting of Bitcoin across certain players, with Ripple making specific statements on not being ready yet for banks and others, we'll see a natural suppression in the market simply because as with any other market, stock or otherwise, there's always an emotional play to this, and we see that very clearly happening. How one weighs out this bubble and how one rides it is dependent on what their mindset. So if you are coming in as a pure investor that's looking for a short-term gain, then riding that wave and working it through on a daily basis may be something that's useful for you. However, for people who believe in true ideas that are coming out of these young startups, that are building business ventures and creating the working capital needed to build their visions, their passions, then the ICO model is actually quite a heralded view, and it's quite welcomed in the self-starter model.
So you mentioned about scams. Is there an issue about regulation, and a bit of the moral question on this one? So what's stopping me becoming the cliche double glazing salesman, knocking on people's doors and trying to flog them this stuff? You know, if I tried to flog your grandmother some double glazing, or in this case the ICOs for her to invest in it, what would stop her doing it? What would be her reaction?
So I think that the one challenge is that, first of all, thank goodness ICOs are not door-to-door salesmen, because That would be really, really challenging. With regards to the pushy sales, there isn't any. So the good news about the morality of this is currently ICOs travel generally from word of mouth and through digital media. And it's in the eye of the beholder to make a conscious decision to part with their precious Ethereum or Bitcoins in order to invest in ICOs. There isn't so much a peer pressure model. It isn't a forced society, but it is an educational curve and a cycle that needs to go through. So I think that morality is super important for this, and I think that, and I hope that people will be investing in ICOs that actually show that they have a super duper team, that they have a real purpose, they want to do good, and they want to change the world using blockchain.
I think that brings us to the end of the interview. Thank you for the time. This was Philip Harrison interviewing Yakin Pravdiel, the Managing Director of Fifth Nine, and hopefully we'll hear from you next time. Thanks very much.